Hello, friends. This is your friend Vivek Bajaj, co-founder of StockEdge and Elearnmarkets. नमस्कार दोस्तों, मैं हूं आपका मित्र विवेक बजाज. Friends, face to face is going global, and this is going to be my first initiative of inviting global experts who are trading global markets to come and share their experience of trading global assets in India. I believe trading is a universal occupation. Almost 60 to 65% of the concept is pretty much valid across all asset class. But obviously, there are people who are trading specific asset class, and it's always good to learn from different people with different dimension of trading. One of the guests today, the person, I'm going to start this series anyway, so this is going to be my first video. And the guest today is extremely special. She's a lady who has been trading market since 1990. She has written 5 books on trading. 4 of them have been bestsellers. She has been extremely supportive, and she is mentoring a lot of people globally in her endeavor to make sure that people do trade as a full-time occupation. I would love to welcome Lucy into this discussion, and she's going to take us through fantastic journey of knowing this market the way she knows. Lucy, hi.
Oh, Vivek, it's so good to see you. It's wonderful to be here, knowing how supportive you are for your traders. It's very much akin to the way I teach my traders. So I feel there's a lot of shared values between the two of us.
Absolutely. So when we were doing our due diligence, our working that whom we should invite, we obviously wanted to get that perfect fit where a person who is actually believing in the same philosophy of giving back to society, helping people to do the things in the right way. And we came across your profile and very happy and glad that I'm interacting with you. And I'm excited that I'm going to learn with you very interesting concept of candlestick. We all know candlestick, but the way you know it is quite different. And you have agreed to share that knowledge with us. So first of all, thank you so much for agreeing to do that.
Absolutely. Well, I'm so excited to share with you 3 new candle patterns that I'm fairly sure your audience will never have heard of at all in the past. I'm going to apply some of those candle patterns to Indian charts. And then at the end of the session together, you're going to put up incredible charts for me that I will have never seen before, and we will analyze them together. So that is going to be a bit of the potluck, a little bit of a smorgasbord. I'm really excited about that. I love doing analysis and I love teaching people the way that I analyze charts. So let's get started. I'm going to kick off with my screen share so that we can make sure everybody can see my presentation. And I'm sure we will come up with some amazing pointers here for your traders. Okay.
Absolutely looking forward to it. So, just wanted to say one thing. I'm used to recording this on our regional language, Hindi, but I obviously have to record this in English with you. So, what I intend to do is that in the middle, while some important points which you mentioned, I'm going to translate that into Hindi so that my learners who are also localites in India, they also learn those advanced concepts in their local language. So maybe I'll take some spaces in between while we interact so that I can translate your important pointers in Hindi.
Absolutely. I think that would be a terrific way to go. It's always exciting for me to have somebody who's very fluent in more than one language. I have just got a smattering of French and I only speak English. So you're definitely a step ahead of me there. My mother used to speak a little bit of Hindi. I wish she had have spoken it more clearly for me and forced me to do this as a child, but no such luck.
How come she speak Hindi? I mean, do you have any connection to India?
Yes, my family going back generations was very big in the tea industry. So my mother was born in Colombo and there were tea plantations that my sisters were raised on in Sri Lanka, but also there's some Indian relatives. I really would love to be able to come back over and to say hello to you in person. I'm sure down the track, once this plague is over and done with and we can all recover, I'm sure we'll be able to organize something there.
Absolutely, and now I know why you are such a good trader because you have that somewhere you have a bit of Indian subcontinent blood inside you.
That's right. That's right. Actually, I have to say, when I was looking through the Indian charts and the Nifty 50, I was so excited to see so many wonderful trends unfolding. That Darvis box idea where it goes sideways, up, sideways, up, sideways. Oh, I just loved it so much. So you have really developed a love of the Indian chart culture here for me. I'm really looking forward to exploring that further.
Superb, superb. But we want to know more about you. This is very excited that you have some bit of Indianness inside you. But we do want to know more about you. So please spend some time in telling about what you are doing right now, and then we get into the concept discussions.
Definitely. So, my name again is Louise Bedford, and my website is tradinggame.com.au because I'm based in Australia. So that's the AU on the end. So I'll tell you a little bit about my background. As you've already mentioned to your beautiful audience, I have 5 books on the share market. Now, the one that I really want to draw attention to at the moment for this presentation is The Secret of Candlestick Charting. This is the one where all of the patterns that I've come to know and love, I got to write about. It was so exciting. That book only took me 5 weeks to write. I couldn't sleep. I couldn't eat. I had to type and type and type. I was so excited. All this candlestick knowledge poured out of me. And that was quite a long time ago. So I have updates from that book. And these are the ones I want to share with your traders, which is really exciting for me to know that across the world, there are candlestick enthusiasts and we share a common heart, kindred spirits. So let's have a look a little bit about what I've been doing since I wrote the books. And during that time, I look after lots of traders from around the world. I find trading, it's terrific in terms of earning me some money, but it lacks a little bit of heart, that human content, that input from others. I really do need people to feel fulfilled. So that's why I've started training people, and I've been running a mentor program for the last 22 years with my business partner, Chris Tate, who is also an author. He wrote the first book about trading on the Australian market that was published in Australia. And we teamed up many, many years ago. So a multiple decade partnership there. He's a wonderful person. And you can see here in the slide some of the people that we've trained and some of the people who we adore. So the one that I think is particularly relevant there is the elephant. The elephant, I was quite happy to show 2 charts to, and the elephant did choose the uptrending chart. I thought that was a wonderful thing. So I will consider him one of my pupils as well. So let's have a look at the basics of candlesticks. With candles, I know some people find them a little confusing. So everybody just take a deep breath. Oh, and just, okay, good. So it's fine to be a little bit confused. It's fine. But I'm going to break this down as simply as I can and to give you some really good information for advanced traders as well. Now, when I started trading all those years ago, I started looking at bar charts, which we know they are everywhere. There's an open and a close and a high and a low, and they didn't speak to me. They did not sing to me. I thought they were pretty ugly. I didn't see anything in them at all. And when I said that to my broker, he said, well, you need a line chart then. So he showed me these charts, these line charts, these skinny little anorexic, just a line, nothing there, nothing with a body, nothing with emotion. And then years later, I found a lady who introduced me to candlesticks. I went over to her house. I was whingy and sooky and moany. I said, I can't make money. And she screamed at me, are you using candlesticks? Just briefly, I wondered whether she was going to murder me. I don't know what she meant by that. I had no idea. She took me through. She showed me her hand-drawn candlestick charts in her office, and I ordered a book from America. They sent it to Austria instead of Australia. what the heck, hey? So finally, I got this book. I read it cover to cover. I loved it so much. And here is one of the candlestick charts, just in all of its glory. You can see green being the color of growth, red being the color of blood. So when things are more green, the chart's growing. When things are more red, the funds are bleeding out of that chart. And the thing with that is instantly you can even teach a child. You can teach a child about that, which is what I love. If we're getting too complicated with our trading, we are probably not going to be able to make money over the long term. We have to be able to simplify our ideas and transmit those ideas so they can be used again and again. And that's one of the things I love about candles. So let's go into a little bit more detail. When the close is above the open, that colors the real body in green.
Yep.
And that's the color of the candle there. You've got the overall high and the overall low as well. So that body is the most important part. You're comparing that body with other bodies, and that takes priority over the upper wick or the lower wick. Some people call them shadows. Some people call them tails. They're all the same thing. But the real body is the important part. Mm-hmm. And here's a red candlestick. Now, if you're looking at it in a book, it's probably going to be printed as white for green and black for red. They're the same thing, okay? All means the same thing. So you've got the two basic colors. Now, I just want to show you, this will be a time that you'll always remember, Vivek. It'll be very precious, I'm sure, for you and for your audience. You are going to see a baby candlestick born. Oh, doesn't that sound lovely?
It is. It is.
And you'll see it live and then you'll see it die. So what we're going to do is we're going to do a little bit of time-lapse photography. So watch carefully as the markets open. The markets have opened. The buyers are flooding into the markets. They love it. Oh no, somebody started to sell. More people have started to sell. Oh, the market closed for the day. My goodness, let's have a quick look at that again. Here's an instant replay. Oh, the buyers are loving it. Someone's starting to sell. The sellers are selling it all down. Oh, and the market's closed. Now, that can happen over one day. It can happen over 1 week. It can happen over 1 minute. Depending on the period on the chart, depends on the life of that little candle chart. Now, that gives you a bit of an idea what real-time traders see when we look at our charts and we can see the data coming in and it's creating the candle as we go along. Now, there's a couple of things with this. For people who haven't seen a real-time candle live and die, I know this will be a little bit strange, but with the passage of time, the candle personality is revealed, and that's what we've got here. So Vivek, when you're looking at this candle, I think it's really important to notice how the sellers have come in and the price has dropped. So what does that tell us? It tells us when there's an upper tail, the share price is likely to go down the next day. Okay, so that's interesting. And the body itself is quite small. So if the body is small, it means when the professionals close the market, they're coming quite close to where the amateurs have opened the market in terms of their estimation of the price. That is a very tenuous little candle. That is saying, I don't have bullish strength. I've run out of puff. I'm having trouble driving that price up. So I'm about to flip that price over, and it's a very bearish sign. And in fact, that one is called a shooting star. There are about 31 that I use, but I'm not going to take you through each one. I know that I've got a wonderful book where people can go to, The Secret of Candlestick Charting, to look them up. They can come to my website, tradinggame.com.au. They can get information about those others. I want to take you through some very special patterns and apply them to charts. So maybe if you haven't had a lust for candles, you can listen to the heart of the candle and get more of an implication about what that candle is likely to do to the future share price information. So let's have a look at a way of entering the market. The difficulty is people try to use candles for everything, and really they're the best used for entry rather than exit. So this is how I enter the majority of my trades. I look for share prices that are generally going up. I'm looking for a period of sideways progression, and then I get triggered in on a long green candle, ideally on heavy relative volume, breaking past a layer of resistance. Now that is a breakout. That's a bullish breakout, and it's delicious. You can see them again and again. Indian charts are full of them. I could not believe, I couldn't even choose for the number of examples on the Nifty 50 because there are so many breakouts. Have you found the same, Vivek?
Yep.
So many. So let's have a look at an example here. Now, help me with the pronunciation. Is this Tata Consultancy?
Yes.
Yes.
Perfect.
Excellent. Good. Now, my data, it's a few days old because when I put the presentation together, so let's have a look and see down the track what this is going to do. But to give you an example as to a breakout, have a look at this period of sideways progression on this chart. It's beautiful. It's hovering underneath the share price. That gives us a lovely firm line of resistance. We've got a gorgeous green candle that I've circled for you, and up we go. Now, that type of breakout, you don't usually get on, you don't enter on that breakout candle, you enter in the candle after.
Okay.
Because you often won't see that breakout candle. It'll be happening, you'll check your data at the end of the day, and then you will have seen, oh, it broke out. Okay, that's fine. Okay, so isn't that a gorgeous example? Beautiful.
Mm-hmm.
Okay. True. So let's look at a bearish breakout pattern. Very similar. We've got an existing downtrend. Ideally, it's been going sideways, then down, then sideways, then down. But often we know that the bearish market is different from the bullish market. The bearish market is where things can drop from the sky with barely any provocation at all. Things can drop so fast, and it's because fear is stronger than greed. You know, with greed, we're all trying to hope, we're breathing life into this share. We're trying to CPR it if it's hesitating and halting. With a bearish breakout, things can happen really, really quickly. Let's have a look at retracement trades next, and then we'll go through a couple of examples. If we've got a retracement trade, this is one of my key archetypes that I use when I'm looking for a particular sort of template of share price action. A bullish breakout or a bearish breakout and a bullish retracement and a bearish retracement. Okay. They're the top two. They're the top two that I use. Now with this, it does take a little bit of extra candlestick knowledge. So you're looking for an existing uptrend and you're getting involved at a sign of temporary weakness triggered in by a bottom candlestick reversal pattern. Okay, so this gives you a very high probability that the share price will go up and away after you've had that bottom candlestick reversal pattern. And it's wonderful to see because if you're the type of trader who enjoys that instant kicker, you get involved and then, hey, instantly I've made money. This is the one. This is the one for you. A retracement trade will give you that. It's a beautiful feeling when that happens. It's not necessary, but it does feel good, doesn't it?
Yep. So I just Lucy, there is one question in this that, a few minutes ago you talked about when do we enter, and you said that the candle where the breakout happened, I will not enter in that candle. I will wait for the candle formation to happen and enter in the next candle. Same logic works here, that the reversal pattern which you saw, the candle which you have highlighted, so you obviously can't enter there because a pattern will get confirmed after the closure of the period, and then you enter in the next candle. Or do you wait for more candle formation to enter, or the second candle is good enough?
It's an excellent question because you're talking about the level of confirmation we need before we make a decision.
Yeah.
Now, if you're a very short-term trader, so if you're trading, like for me, I've done 2-minute charts and I wouldn't advise it. It's just crazy. It's far too short a period. 4-hourly charts. Let's say if you're trading a 4-hourly chart, the shorter the time frame, the less confirmation you need to enter a position.
Okay.
So if you're a weekly trader, most of my trades are based on weekly charts because that's the wealth creation, it's the longer term type of trend, it's the wider stop concept for the system. As a weekly trader, you do need a bit more confirmation because you really want to make sure that thing's going to go up. Whereas if you're an option trader and it's a twitchy little market that you're dealing with, then you can rely on less confirmation, and that works as well. Yeah. And we'll talk about that in just a minute. I'm going to take you through dominant candles, and I know you'll love that. Yeah. Good. Okay, so we've just looked at bullish retracements, and we can also look at bearish retracements. Now, Vivek, I don't know about your markets in terms of trading short. Can you trade short in India?
Only intraday. We can't carry forward the position because the share borrowing system is not very efficient here yet. But there are
Sure.
stock futures, around 150 stock futures are there where one can play short positions.
Oh, well, that's interesting. So that's a good thing because I think as well, the majority of my trades are long. It's going up to make money, and certainly for indexes because there's an upward bias with indexes. Any dud in the markets gets taken out of an index, and so there is an upward bias. But it is also good to learn about the other side. Even if you're not going to trade a bearish retracement, it's good to know that they exist and that you can see a top candlestick reversal pattern during an existing downtrend where you're triggered into a short position. It's a good one to know about because if it's happening in your shares that you own, it gives you a little bit of an understanding about what's going on here. You know, it's a really good idea just to try and immerse yourself in the mind of the market. You know, look at charts and really absorb what they're trying to tell you. Now, here's where I'm up to. You're going to love this. This is a dominant candle. Now, I've got to say, if I was allowed to trade the Indian markets, this is my key tool. So I feel like we're building up to a crescendo here with this pattern, Vivek. This is a beautiful pattern. This is a long candle of either color with heavy relative volume. Okay, and we're going to look at an example in a moment. Now, the key point to know about here is that support and resistance, usually we think of lots of share price action with support and resistance, but with this, we can look at the base, the middle, and the top of the candle within the candle to provide support and resistance. And it's a wonderful thing because if you're not sure where to set your stop, and you've got a green candle, you really don't want it anywhere higher than the base because that will form support. Let's have a quick look at how this can go. I want you to have a look as the audience here, have a look at this Asian Paints chart. Now, I'll give you a few little hints here about how to view this so you know what you're looking for. What we're looking for is we're looking for a dominant candle, which we know is a long candle of either color. Let's narrow it in further. We're looking to see what is the overall trend. If the overall trend is up, your eye should go to green dominant candles. Okay. And also think in the definition, heavy relative volume. So have a look at the volume along the bottom and see where you've got the big spikes of green that correspond to a long candle. Okay, now has everybody had a look at the chart? I'm hoping you have. If you don't have a look, this won't resonate with you. You've got to actually do the work for it actually to make sense. So point out on your computer screen now. If you're watching at home, if you're watching in your office, point to the dominant candles on this chart. And I'm going to fast forward to an answer I prepared earlier. Here's the grand reveal. Is everyone ready? Here we go. There are 4 dominant candles on this chart, 4 of them. Now, it's fascinating to see because it'll help you with setting stops. It'll help you with entry. It'll help you define your support and resistance levels. And it's very exciting to watch when you can see such clear examples. It's a beautiful thing. So we can talk about this when you're finding charts for me, Vivek.
Sure.
I'd like to do this live so we can see if we can spot some together. Now, I've got another wonderfully new pattern for your traders, one that nobody will have come up with there, because this is my baby. I named this one. Exciting to have naming rights for a little candle. This is the inverted piercing pattern. Some of you might know a piercing pattern. This is an inverted piercing pattern, because have a look at that red candle. That midpoint of the red candle summons the next candle's opening, and the next candle closes above the entire body of that red candle.
Yeah.
It's a very bullish candle. And in fact, if you're used to doing candle addition, this is the same as a bullish engulfing pattern. That is one of the strongest patterns that there is. This is the reduction of it, which gives one candle on the basis of many different lines in the candle pattern, that actually reverts to the same as the bullish engulfing pattern. So you'll love to see these ones in your charts. Have a look at that candle addition for me. All right. You can see that that's a small green body with a long tail. That tail pointing downwards suggests next share price action will be going up. And the small body suggests indecision. So it's where the professionals and amateurs are agreeing. All right. That's a bullish sign. That's a very bullish sign. So that's a good one to look out for in your charts, an inverted piercing pattern. Let's have a look at your index. Oh my gosh, you could imagine my delight when I saw my beautiful pattern named halfway across the world being applied to your Nifty 50. Check this out. Almost every major recent change of trend has occurred using an inverted piercing pattern. Isn't that amazing?
This is can you just, for the sake of revision, can we go back to the previous slide and
Yes.
see this inverted piercing pattern once again? So you are saying that there is follow-on candle after this pattern. There is one more candle which will come as a confirmation. Is this what you're saying? No?
That's right. So with any candle pattern, a candle pattern by itself, it will have an impact over the next 3 to 10 periods of
Okay.
share price action. And you want the next candle to confirm that the candle pattern you've analyzed
Okay.
is actually going to work.
Okay. Okay.
Yeah.
So in this particular pattern, you are saying that after the first and the second candle, first is the red, second is the green, which is like a confirmation of bullish pattern. And then there is a third candle, which will be like this, which is a confirmation of the bullish move. That's what you're saying?
That's exactly right. That's right. So when you have a look at the Nifty 50, I'll just go back to this chart so you can have a look in closer detail. You can see wherever there's a circled pattern, which is like an inverted piercing pattern, the next candle shows that it's going to go up. And in fact, that first one on the chart, wouldn't that have been a great time to get involved? Sure, you had to sit through a little bit of medium guff before we've got a breakout again, but it gives you a really good inkling that this little downtrend is failing. It can't keep going down. The bulls are coming into the market and they're breathing life into that index, and it's saying, no, we're going to go up, up and away. Yeah.
So Lucy, one thing is that, I mean, these are patterns which can we incorporate them as an algorithm inside these charting softwares and let the charting software tell that this pattern has happened. Is it possible?
Yes, there are some that do this. Advanced Sketch and Beyond Charts, you can do a scan for these candle patterns, but Vivek, don't do it, because you know what happens with these with these algorithms. They are so specific. They're so specific. They say, okay, if it's like half a cent out, I'm not going to tell you about it. What I prefer for my traders and your traders to do is to run their scans based on weight of evidence of other indicators. So look at things like moving averages, look at new time highs. I don't know what list you're getting in India, but we can do like new highs over a 52-week period, and we can identify those. Get those into a short list. Maybe there's 30 stocks there that you think, hey, they're roughly going up. Then use the short-term candle pattern to trigger your entry.
Sure.
So all the other weight of evidence still applies with this. You still need to have everything else saying that this thing is going up, and then that candle pattern can be the trigger.
So you want at least the candle pattern identification should be more discretionary, more person oriented rather than just an algorithm trying to do that for you.
Yes, exactly. And that's why as well, I think it's really important that we understand the psychology behind each pattern. It can take a little bit of time to get your eye in, but if you have a think about what are the people on the other end of that trade thinking? I used to, way back in the early 90s when I was learning, I used to think I was so good. Oh, my ego. I was just immensely happy with myself, Vivek. It was just hideous to be around. And I never understood why the person on the other end of my trade would be selling or buying. And then after many, many losses, I realized why. Maybe they know something I don't. So we really do need to stay humble with this, stay detached, and do everything we can to make sure our setup and our trigger is saying the same thing in the same direction.
Okay.
Yeah.
Fair point.
Yeah. That's good. Okay, so let's move along. I've got another one for you. This is the inverted dark cloud cover. It's the same concept, but this is at the top of a little uptrend. This reverses it. So it's a top reversal pattern. And if you have a look, you can see the same type of look just opposite at the top of a trend. So when we look at the candle edition, you have a very strong long upper tail, which is suggesting share prices are about to go down, and a small real body. Oh my gosh, that sucker's a shooting star, isn't it? Magic. Just reverts to a shooting star. And that is exactly the same as a bearish engulfing pattern. If you had candle edition for a bearish engulfing pattern, it would have the same strength and veracity as the inverted dark cloud cover. So I'd like to just open things up for questions and answers here with you, Vivek. I've got a free trading plan template that your traders can download. Now, this is going to give them all of the areas that they need to know about to be able to be a successful trader. And you'll also get my free Trading Made Simple audio course. That is going to be terrific for your traders, and I know you're going to love it. And it's at tradinggame.com.au. So that there's just the website reference there. I think what I'll do, I'll stop sharing my screen so that I can see you in more detail, my friend. There we go. Good.
Absolutely.
And hopefully that gives you enough of a background about candles so that not only have I piqued your interest, but you'll also start looking more deeply into the charts that are in front of your very eyes in candle formations and seeing how they can make you money, because really that's what we're here to do. It's not just to be technical analysts, it's to actually make money out of this thing.
Absolutely. True. So what I'm going to do is I'm going to share my screen now, and I'm going to throw some charts on you.
I'd love that. Good.
And we're going to have a discussion on few of these charts and see what sense you make out of this. So let me start with this stock, which has been very excitingly performing over a period of time. And I believe you want to see the weekly chart because that's what
the weekly would be fantastic.
weekly will be
Exactly.
fantastic, right? So let's do that. So this is a company which is a large music owner of the large music broadcast in India. Um, so this stock is going up like crazy. Now let's figure out few candlestick patterns based on your story.
Sure. Now, are you happy for me to draw on your chart I could probably write a few little notes so that people can see what I'm seeing. I
Sure.
think that would be the thing to do. Okay.
I can do that. This looks
Lovely.
interesting. This one?
This is fantastic. Yes, look at that. Okay, so first thing I do when I'm looking at a chart is I'd put a moving average up. So I don't know if it's easy for you to do, but if
I
it's
can do.
not, that's okay. So
I
I
can do.
put a 30 week, 30 week moving average up over the top. And that gives me a nice medium term view. And I look to see if share prices are above or below the moving average. And clearly here, they are above. Now, one of the things that I'm looking for as well, this has gone actually quite a long way up, which is a beautiful trend. It's gorgeous. So let's just start looking at support and resistance lines. So we can probably have quite a clear resistance line here. I'll just draw in a couple. Here we go. We've definitely got a beautiful layer of resistance here. Here and here. Okay, fantastic. So then once I've got my support resistance lines in, then I'm starting to look to see what is the action after the support resistance line has formed. So what I'm looking to do is to look for things like breakouts, and have they held in the past? Now let's look at this one. Here's a little breakout. Now here's a breakout here on this volume. You can see there's a little candle, but right beside it is a bigger candle that has cleared that level of resistance. I'm looking for the share price action to be above that level of resistance completely. Real body, open, high, low, close, the whole lot above. That would be your trigger for entry. Okay. And you've got a lovely breakout here. You've got a breakout here, which is a bigger type of look. And look at that, we've got a candle forming here. So really from a trending point of view, this is trending beautifully. I have to ask you though, there's a thing called first signal. Have you heard about that with analysis, Vivek?
I'm not able to recollect right now.
Sure. So this is something, I think it is actually my business partner and my wording for this. So I don't know if it's popular yet, but I think it will be. One of the things when you're looking at trades is that you're trying to get in as close as possible to the earliest breakout that you can get.
Okay.
This has actually gone quite a long way, and I know a lot of Indian charts look the same. They've trended and trended up and up, and you're quite a long way from that initial breakout, because that initial breakout is here, which is what are we reading here? I can't quite read across. Is it around about that? Yes. So
so sorry. So sorry.
That's okay. That's all right. Yeah. So it was about 757, and now we've got a price of quite a lot more than that. So it's already gone quite a long way past it. And you'd have to wonder whether that's the best opportunity. So in reality, you'd get that out on a scan. You'd maybe have 4 or 5 choices. You'd look to see which out of those 4 or 5 choices was closest to the first signal and which one's the cheapest. Because the cheapest ones have the biggest bang for bucks. So if I don't know which one to choose, I'll choose the cheaper chart.
Okay.
Good. Let's do it again.
Yeah, let's do some other stock. By mistake, I moved this one. So let's take another stock called CDSL. We can clear this. Could you clear this one? Yeah. Then
I'm pretty sure I can. I'll just go
clear. All right.
step.
Yeah, I'm done.
That's well
I've
done.
Yeah. Cool.
Good.
This is another chart, very similar kind of an orientation.
Oh, beautiful. Look at this, baby. Now, just in relation to what we've been talking about before, my eye immediately goes to this candle. Let's do a little bit of real-time comparison between what I was mentioning and what everybody can see at home. You can see this base of the candle is the critical area. So you'd be able to say that there'd be a layer of support at the base of that candle. Now, whereabouts for buying from now on? Here is the top of that candle, which will form resistance. You'd be looking for a clear breakout on a green candle on heavy relative volume above the top of that real body in order to get involved. That's a perfect example. It's a beautiful thing to see.
Lucy, one thing I want to understand from you, I've observed this that you are not giving importance to wick. You are more focused on body, the head of the body and the bottom of the body. Is this consciously you're doing?
Exactly. That real body to real body comparison is the most important comparison. The
Hmm.
overall high and the overall low, sometimes you can even see them on a brokerage screen. Sometimes it can be like, oh, they just got pipped and it's just one stupid little trader hanging
Yeah,
out there in the wind,
yeah.
isn't it? You're after the comparison between where the amateurs open the market and the professionals close the market, because that's the meat and that's what you're looking to really make money from. So this is a gorgeous example. And you can see as well, usually I'd be saying, if it was in Australia, make sure it's above the moving average. Heck, almost every Indian chart's above the moving average. How
Hmm.
lucky are you? Honestly, I was salivating when I saw how good your charts were. So the other thing I'd be looking at is I'd be looking at things like average true range to help me set a stop. You familiar with average true range?
Yep, yep.
So I'd look at an ATR, which would be 3 ATR below the share price action. So once you get the lovely green candle above, there we go. Nice.
This is the HAR.
Good, good, good. Okay. So the most recent ATR is around about the 100 mark, which is great. So let's just say, yeah, there we go. Nice. Look at us bonding over a chart. Gotta love it. So once you've got that ATR level, then once you've entered into the position, you'd set 3 times that ATR mark to be your stop loss, so that
Okay.
you're going to exit when that share price behavior has changed substantially. Vivek, can you do an automatic stop in your brokerage platform?
Yes, we can.
Jackpot. You've got to set that stop when you first go into the trade.
Hmm.
Yeah, love it.
You are saying 3 times of ATR, so I guess Super Trend does that, right?
Yes, exactly. That's exactly the way to go. You know, usually with super trend as well, yes, you can put it
This is
onto the
almost three
chart.
times of the ATR. And ATR, what factor do you use? 10 or 14?
Look, it can be up to 21. So I
Okay.
actually use 21, so it has a higher smoothing factor.
Okay.
With your charts, though, given how low they are in terms of volatility and how smooth they are in terms of trend, as a homework exercise, I feel that your audience really should test 2 ATR. 3
Oh,
ATR is good for more volatile shares. We've got them. The US has got them. You guys, oh, you're in such a beautiful position having such smooth trends. So I would really consider doing some manual back testing at least on 2 ATR to see how that suits as a stop.
okay. Okay. So basically, depending upon our volatility and our working in India, we have to figure out which one will work good. Based on your experience in Australia, you have concluded 21 and 3
Yes.
ATR works well. In India, probably we'll have to reduce the factor. Do you think we have to think about reducing length as well, ATR length from 21 to 14 maybe? I don't know.
You know, there isn't actually that much difference when
Okay.
you play with it. And you, like, if you just go up, you know, to 21 and then you go down to 20 and then 19, you see where it ends up on the chart, because you can see where you'll get stopped out. It's fascinating to see how little difference some of these time increments
Yeah.
mean
Yeah. Yeah.
in reality, when you have technical analysts ready to wring each other's neck to say, how dare you use a 21? You know, what's the point if you haven't actually worked it out yourself? So sometimes it doesn't make that much difference at all.
Okay. Okay. Now let me take one stock which is favorite of everyone in our country right now. It's called ITC,
Yeah.
which is the largest manufacturer of cigarettes in India. And
Ah,
everyone wants this stock price to go up, but it is not going up. So what do you think? What should we?
no. Um, Look, at risk of offending anybody, because you know I wouldn't want to do that. So let's just imagine that this is completely a chart that nobody has ever seen before.
Which is
The
the
question,
case? That's why
that's
I'm asking
it.
you.
That's it, exactly. So firstly, I'd look to see, is it above or below the moving average? Here we have mixed views, sometimes above, sometimes below. Then what I'll do is I'll draw in my support resistance lines, and usually my support resistance comes over the top of a key candle pattern and underneath the majority of share price action. I don't know if I can move that up. I should have just been able to move it up just a little bit there, but you'll get the idea.
Should I go? Should I do it for you?
Can you do it? Oh,
Yes, yes.
that
So
would be wonderful.
yeah, so let me just clean this animation.
So you can see that the share price action is going up, hitting its head, coming down to jump onto the floor, up and down and up and down. Beautiful. There we go.
Is this okay?
That's perfect.
Okay, and maybe this one.
Oh, you're a wonderful man. Look at that. Okay, so for me, I'm again not meaning to offend anybody with anything I say here, but this in no way compares to the other two charts that you've shown me. We don't have clear weight of evidence to say that the setup's in place to say that it should be long. We definitely have sideways progression. The one bit of hope I could suggest here is something called the measure rule. The longer something has been traveling sideways, the more it will trend up when it finally goes. It's like you flip that sideways progression on its side and you measure up the same amount. Okay. So that will give you perhaps a bit of a, for those of you that are bulls on this thing, a little bit of hope to give you an idea how far that thing could jump and go if trending, but you'd want a really clear breakout. You'd want it to keep it above its moving average. This is, in my view, nowhere near a buy.
Okay, so this is 16% range. Okay, so you're saying that if it breaks there with that, the candle which you suggested in that presentation, it should give a big move. But how far this can go based on the consolidation of 16%?
So if you just put your fingers up to the screen and measure on the side how far it's been going sideways for, and flip it up, that'll give you an idea. Yeah, just as a general rule. The thing is, though, are there better opportunities? I have to question whether people's own motivations and biases are getting in the way here. If this is a favorite stock, it reminds me in my country of a stock we have called Telstra. Now, Telstra is a dog of a stock, but people love it because they were gifted some free Telstra once, years and years ago. So now things are a little different. Telstra is not something any self-respecting trader would have in their portfolio. Yeah, good.
I got the hint. I got the hint.
I mean, look at this. It's such a dog. So look, it's certainly not one that a trader who's looking for weight of evidence would back. That's all I'm saying. And you have to question your own motivations and your own anxieties. You know, some people feel so strongly about a share, it's almost they're blind to the share price action on the chart in front of their very eyes. And it's the wrong way to go about it. And it won't make you money in the long run. It'll only interfere with your profit.
Sure. So you see, I created this category called Eagle. I define certain stocks with very high momentum as Eagle stocks. So let me just show you a couple of charts and you give your view on those charts.
That's beautiful. So what we've got here is a gorgeous look because we're after something that goes either sideways up, sideways up, sideways up, or a scallop shape. All right. Now, having a look at this one, you can see here, there's your support layer. So your stop should be under here. And look, we've already exceeded the real bodies forming that top of the scallop. That's a beautiful look. That's a breakout right there. And you're early on in the trend as well, which is nice. So the first signal concept, you're pretty close to that. It's come up above that moving average here. Okay. So anytime from here, that's when we're looking to enter. It's looking good, man. Love it.
So may I ask you a question that why 30 period moving average? What's the significance of 30?
I guessed.
Okay.
Years ago, I guessed.
Okay. Okay.
It's a medium-term moving average. I seem to relate with that type of medium-term view. The majority of my trading is held over weeks rather than hours. So I'm after an indicator to match that time frame.
Okay. Okay. So, just to summarize our discussion, that candlestick specific pattern of candlestick, like these big patterns supported
Yeah.
by moving average in weekly chart. Those are great trend identifier, and one
Yes.
can use low of these candlesticks, the heavy candlesticks which we have discussed, as our stop loss to ride a trade. When do we
When do we?
book profit or whatever loss?
Oh,
Loss,
okay.
we
So
know that stop loss could be the
when
low of
do we
that candle.
exit?
Yeah, when do we exit?
Yes, that's right. So I still look, I know a lot of people like to talk about profit stops. I'm not a big profit stop person. I do have a windfall profit, but that's extremely rare that gets enacted. And I only remove a third from the table when the thing's gone ballistic with no reversal. I look at a 3 ATR for all of my stocks. And so
Okay,
maybe 2 ATR in India. I
okay.
put it in at the time that I enter my order. And then after the share price continues to move, I move it up as it keeps going up in increments. So that's my trail.
Okay,
And another good trail is a moving average. So you
okay,
can get out on a moving average, even a beginner trader. I taught my dad years ago, I said to him, as soon as your stocks go underneath a 30-week moving average, please exit. He hadn't listened to me for my entire life. Thank goodness he listened to me then, because he exited before the GFC, and that
okay,
made a big difference.
okay, okay. Fair enough. So let me just add super trend again. So you said 21 period ATR and two
Yep.
factor. So okay. So so this is a weekly chart, and it is giving there was a trend, but now it has kind of given a negative signal and again a buying signal. But it's still trading above the 30 period moving average. So can I assume that if a stock goes below 30 period moving average and the super trend is also negative, then you exit just below that super
Yes.
trend?
Yes, absolutely. You don't have time to hold dogs in your portfolio. You've got to get out of those ones that aren't behaving and back into one that's read the rule book and who knows how to trend. The worst thing you can do is be caught up emotionally in shares that don't love you. They don't love you. They don't know you exist. So get out of that one and get into one that's trending up.
Okay, so I'll take the last stock as part of this discussion is this stock. What do you think about
Oh,
this stock?
that's beautiful.
Hmm.
So you can see here, my eyes go to this pattern here. This is called a rising 3 with candlesticks. We've got a long green real body, short, it can be up to 15 short little bodies, usually within the real body surface area, trending down. And then look at that, the absolute definition of an uptrend with that final candle going up. So that candle pattern, if you're looking to do a pattern-based stop loss, you would set your stop underneath the base of that candle, that first candle. That would be a significant area to exit. That's a beautiful look.
This is a very big stop loss. I mean, 2,500 stop loss, and the entry price is approximately 2,800. So you're talking about 300 point stop loss. Uh,
Mm.
and you trail that stop loss based on super
Yes.
trend, which is almost 3,000 right now.
You know what we found though, with all of the back testing and even with my personal trading, a lot of people are very worried about wide trailing stop losses. You
Okay.
know, I would rather be in a share for years if it's
Hmm.
doing the right thing. The
Okay.
wider your stop, some of our traders have experimented up to 10 ATR for a trailing stop.
Hmm.
10. So careful about thinking that you're getting out early, you're getting out late. You know, we're making value judgments on something where we should just be listening to the share price action to give us the inkling about what to do next.
Okay. Fair point. Great. So, friends, I hope you understood the crux of the matter. Obviously, this is a discussion which can go for hours and hours, but I think what we have received from Lucy is pretty clear that there are unique candlestick patterns which you can adapt and you can get into the market, search for the stocks where those patterns are satisfied. Weekly chart is the perfect setup for a long-term wealth creation. 30-day moving average is a fair enough indicator to confirm the trend, and use ATR. And you will have to experiment with the ATR parameters. Use ATR to exit the trade. Otherwise, keep on trailing the profit. That's pretty much the it is. Lucy, it was great,
What
amazing,
a
really.
beautiful summary as well. Well done. You are quite the articulate host. I have loved talking about charts with you, and I hope that some of your audience members can come and visit me at my website, tradinggame.com.au, and once they register, I'll be so happy to send them my Trading Made Simple course for free.
That would be great, and I would definitely suggest my friends, particularly people who now want to move on to the next level of their Indian trading career and start thinking about going global. She is the perfect one to get exposed to and learn this art and science which works in global markets. Thank you, Lucy, for this amazing time. I know it's a different time zone there, so we will not hold on to you further from here, but looking forward to host you someday in India and give you a round of trip to India and make you part of the cultural heritage which we have out here.
I would love that so much. And your work, everything that you're doing for your traders, it is to be commended. You have such a big and generous heart. And I just do feel like I have got a kindred spirit across the way there. It's been wonderful interacting with you, finding out more about you and everything that you're doing for your traders.
Thank you so much. Now we are good friends across the country, so I hope to be in touch with you in future as well. Thank you. Thanks for this lovely content. Bye.